Welcome to the Deep Dive. Today we're digging into the Q3 2025 earnings call for the trade desk, ticker TTD. And this one wasn't exactly straightforward, was it? It felt like a real case study in, market psychology versus what the company actually delivered.
Exactly. That's our job today, right?
Yeah.
To sort of cut through that static. TTD put up numbers that look like a textbook clean beat, but the stock took an immediate hit afterward. So we need to unpack the operational reality, look at their strategy, and try to figure out why investors seem so, nervous, despite really solid execution.
Okay, let's start right there with those numbers. The ones that on paper looked great. TTD beat consensus pretty much across the board. Revenue was $739 million. That's an 18% jump year over year, way ahead of what analysts expected. And actually, if you strip out the political ad spending from last year, the growth was even better, like 22%.
Yeah, and the quality looked good too. Non-GAAP EPS hit 0.45 cents, just edging out the 0.44 cent consensus. Plus, they showed real discipline on costs. Adjusted EBITDA came in strong at $317 million. It's a 43% margin. Pretty efficient operation.
So that's the puzzle we need to solve then. You've got these, best-in-class numbers, efficiency, beats. But the stock dips notably in after-hours trading. What gives? Why the hesitation?
It really points to just how fragile investor sentiment is right now.
Sure.
You got to remember the background here. TTD's stock had already fallen, something like 63% in the year leading up to this call. Investors are just hyper-focused on macro risks, on competition. It feels like they reacted less to the actual Q3 results and more to lingering anxiety about Q4, the economy, the whole picture.
Right, that fear about what's next, even when the now looks pretty solid. Okay, let's dig into that solid now. Connected TV, CTV, that's still the big growth engine for them, isn't it?
Oh, yeah, absolutely. The main driver. It's still their largest and fastest growing channel. Makes up about half their revenue now in Q3. And management really hammered home that they see this shift speeding up, away from old school linear TV towards this biddable, data-driven CTV. That plays right into their hands. And something they noted was international growth starting to outpace North America. That's key because, 60% of the potential market is actually outside the U.S.
And the core business metrics look sticky too. Customer retention still over 95%. That's like the 11th year straight for that. But maybe the clear sign of management's own confidence was how they're using their cash.
For sure. They're sitting on $1.4 billion in cash, zero debt, and they're definitely putting it to work. They bought back $300 million of their own stock just in Q3. And then they announced a new $500 million buyback authorization. It's a pretty big statement, signaling they think the stock's undervalued and they're ready to step in.
Confidence isn't just cash, though, right? It's also about having the right people. They talked quite a bit about shaking up the executive team. Seems like they're gearing up for something bigger.
Yeah, that's a really important kind of soft signal. They've got a new COO, a new CFO, and importantly, a new Chief Revenue Officer, Anders Mortensen, who they actually poached from Google, snagging a top exec from, the biggest walled garden out there. That suggests TTD is serious about building more rigor, more predictable scaling globally. It's not just about the tech anymore, and this kind of organizational muscle is probably needed to hit their Q4 guidance. They're aiming for at least $840 million in revenue, around $375 million in adjusted EBITDA. That's roughly 18.5% growth year over year if you exclude the political bump from 24.
Okay, let's pivot to the big picture strategy, the core narrative, open internet versus the walled gardens. Management seemed to think the power balance is shifting, calling it a buyer market. What does that really mean?
That's their core argument. They're saying there's now more digital ad space available supply than there is demand from advertisers. So the power shifts to the buyers, the advertisers, who can then demand more objectivity, more transparency in where their money goes. They kept emphasizing that the good stuff, premium TV, quality news sites, lives on the open internet, where people spend, supposedly, 2/3 of their digital time.
Okay, but I have to push back a little here. They say the open internet is winning, but, Google and Amazon still dominate ad spending, right? Is this more like wishful thinking, or is there actual proof that the walled gardens are losing significant ground because of this shift?
That's the million-dollar question, isn't it? Management points to two things as proof. First, that accelerating shift to biddable CTV we talked about, and second, the success of their AI platform, Kokai. As for competition, like Amazon, they kind of downplayed it. They argued that almost all of Amazon's ad business, like 97–99%, is just focused inward, selling sponsored product listings on their site or ads on Prime Video.
Right. So Amazon's DSP, the part that competes directly with TTD out on the open web, is a Very distant priority in their view. But couldn't Amazon just decide to flip a switch and integrate its DSP more tightly with all that Prime Video inventory they have? Seems like a risk.
It's definitely a risk the market worries about. TTD's position, though, is that Amazon can't really make that shift effectively without messing up its own internal money machine. So TTD believes their singular focus, being objective and only serving the open market, is still their trump card. And their tech backs that up.
Let's talk about that tech then, Kokai. How's the adoption going? Are clients actually using it?
Adoption sounds really strong. They said almost 85% of clients are now using Kokai as their main interface. And the performance claims are pretty striking. Campaigns running on Kokai apparently saw, on average, a 26% improvement in cost per acquisition compared to the old platform. They chalked that up to its distributed AI architecture.
Okay, distributed AI. Can you break that down simply for us?
Yeah, think of it like this. Instead of having one giant AI brain trying to figure everything out, valuing the ad impression, handling identity, optimizing the bid, Kokai uses lots of smaller, specialized AIs. Each one focuses on a specific task. This makes it learn faster, be more precise, and ultimately deliver better results for the advertiser. It's more modular.
Makes sense. And identity is still crucial for that precision, right? UID2 is still the cornerstone. Plus, they rolled out something new called Audience Unlimited to make using data simpler.
Exactly. UID2 is still their answer for identity across the open web, and Audience Unlimited tackles the headache of licensing third-party data. Basically, it lets advertisers access all the different data sets they might need for a campaign through a single flat fee. This gets rid of a ton of friction and unpredictable costs that used to slow things down. Makes data access much faster and easier to scale.
Okay, shifting gears to some other new product initiatives. They seem really focused on cleaning up the supply chain, especially with this open ads thing.
Yeah, Open Ads is aimed squarely at that old problem of shady practices in the ad supply chain, where inventory might get hidden or double counted. Think of Open Ads as trying to create a sort of neutral, verifiable record, like a referee for every transaction. It's an open source approach designed to build trust. And they said they already have over 20 publishers signed on to integrate it, which is actually pretty decent traction early on.
They also seem to be taking aim at the traditional TV upfronts model, trying to change how future ad deals get done with a product called Deals.
Right, Deals is about bringing more precision and predictability to future commitments. It's a tool for managing those direct one-to-one deals between buyers and sellers. But the key is, it uses AI to predict how that specific deal will likely perform compared to just buying on the open market. Management is basically saying this lays the groundwork for a smarter forward market that could eventually replace the old inflexible upfront system with something data-driven.
And there was also trading modes. What's that about?
Trading modes kind of ties into that whole AI co-pilot idea. It gives users a choice. You can either take full manual control, do all the work yourself if you're super sophisticated, or you can lean more heavily on the AI, let the machine handle more of the complex optimization decisions. It's about offering flexibility.
Yeah. So tying all this product innovation together, does it actually lead to stronger relationships with the big advertisers? They talked a lot about joint business plan, JBPs.
Yeah, the JBPs are where you see the commitment. These are basically structured multi-year deals where TTD gets deeply integrated with a major brand and its agencies. And the key point is these JBP accounts are growing way faster than their other business. They said they have over 180 JBPs live now, with another 80 in the works. That represents billions in sort of locked-in future spending potential.
Did they give any real-world examples of how this works?
Yeah, a couple of good ones. There was a large healthcare brand that apparently more than doubled its spending with TTD this year. They credited that directly to better internal coordination and data insights enabled by the platform. And then in the UK, Specsavers, the eyeglass company, used Kokai and saw a 43% drop in the cost to get a customer to book an appointment. That's pretty tangible ROI.
Okay, let's pull back to the macro picture again. The CEO mentioned this tale of two cities. What did he mean by that?
It's a good description of the current ad market, apparently. On one hand, you've got sectors like consumer packaged goods, CPG, and parts of retail. They're still feeling the pinch from things like tariffs, inflation, so they're being a bit more cautious with their ad budgets. But then on the other hand, you have sectors like financial services, healthcare, more forward-looking brands who are actually doubling down on data-driven marketing because they need to prove ROI right now.
And the argument is that this split actually benefits TTD in the long run because CFOs are getting more involved and demanding accountability.
That's exactly the argument. The chief marketing officer is under huge pressure from the chief financial officer to show that every ad dollar works. And the easy, perhaps opaque answers from the walled gardens, where the same company controls both the buying and selling, just aren't cutting it anymore under that kind of scrutiny. So those big programmatic buying decisions are moving higher up the food chain in organizations, forcing a shift towards objective, transparent buying, which favors the open internet model.
Which brings us back full circle to that core tension. Management sees all these massive structural tailwinds, CTV, AI, identity, retail media, putting them in the best spot ever. And yet the market immediately reacts with, well, a shrug or even skepticism.
Yeah, management genuinely seems to believe the structural shifts put TTD in an incredibly strong position for the next few years. The market, though, is just stuck on the near-term macro worries and that recent stock volatility. So the key thing for you, the listener, to watch is, do they deliver on that strong Q4 guidance? And does Kokai and the JBP pipeline keep gaining momentum into 2026? The execution looks solid, but the market mood is definitely jumpy.
Speaking of jumpy moods and maybe trying to capitalize on them, we've reached that part of our deep dive. Time for our big, bold disclaimer. This is not financial advice, seriously. We're just kicking around ideas here for discussion and entertainment. Please don't run out and do this.
Absolutely. But if we were running a purely speculative, maybe slightly crazy hedge fund, and we saw this kind of market reaction to what looks like a fundamentally strong quarter, well, I might start thinking there's a chance for a quick snapback.
Okay, lay it on us. What's the outrageous but plausible trade idea for TTD playing on this disconnect?
All right, the core idea is simple. The market's being irrational. It's pricing TTD based on the fear from that 53% drop over the last year in general macro anxiety. And it's kind of ignoring the strong operational floor, the 43% EBITDA margin, the cash pile, the buyback. That post-earnings dip felt like an overreaction.
So the specific play.
A leveraged short-term bet. Think call options on TTD. The timing is aggressive, jumping in right after that dip, betting against the immediate negative momentum. The outrageous part is fighting that trend. But the rationale is actually pretty solid. That new $500 million share repurchase program. It's not just talk, it's an active funded support level under the stock. So the bet is that if they hit their Q4 numbers, that buyback provides enough support to quickly reverse this temporary dip. It could be an aggressive entry point before that longer-term open internet story takes hold again.
That's definitely a specific take. A compelling case, though, built on that clash between fundamentals and fear. Thanks for breaking down the trade desk's Q3 for us, all the numbers and the underlying story.
My pleasure. Yeah, it was strong Q3 beats, a really clear strategy focused on winning the open internet with big product bets like Kokai, Open Ads, Audience Unlimited, and that huge new buyback. It really is a classic setup. Strong company execution running into nervous market sentiment.
So the final thought for you to chew on. TTD is betting big, billions really, on owning data and using AI for better decisions. How long can those easy answers you get from the walled gardens, the ones where the seller is also grading their own homework, really keep satisfying big global brands? Especially when their CFOs are breathing down their necks demanding clear, objective proof of ROI. That structural fight is the real game here.
Indeed it is. Until next time, keep digging into those numbers.
Thanks for joining us on the Deep Dive. We'll catch you on the next one with more insights from the world of business and finance.